Welcome to another stage analysis video. It is Sunday the 18th of September 2022. I'm going to start tonight's video by having a look at the major indexes before having a look at some of this week's stage 2 breakout attempts and the rest of the regular content for the members later in the video. So starting with the S&P 500 here, this is the daily chart. You can see we're continuing sideways in this horizontal range that we've been in for a good 4 months now. We had a spring type action shake out at the bottom of the range back in June, July time for a decent rally, which started to change of behavior, move into stage 1 potentially at this point, and a retest of the 200-day moving average, so which formed then as an up thrust, started to come back into the range. We had this significant bar on the 26th of August, I believe, dropped us back down, and we started to move back below this 50-day moving average. And then this week we had this terrible price action this week, big sharp break at the early in the week, and then dropped down and closed slightly lower low within the range this week. But at the moment, we're still within this horizontal range, which is potentially developing as stage 1. Could easily break down into stage 4 if we start to see a continuation below the range, major sign of weakness, and it can't rally back into the range again. Then we could obviously quite easily make a stage 4 continuation. But if it can start to rally in here, or needs to test a little bit lower and forms a spring, starts to come back up again, and we get that sign of strength rally back out the top of the range, then potentially we could be on for a rally back out into new stage 2 type territory again in a month or so's time potentially. But at the moment, no one knows where we're going. We're still in this sideways range, and at the moment we're in this short-term downtrend. So obviously for almost a month now. How many days we got there since it started to break? We've got that 20 period, so yeah, around a month in trading days since we broke down, and we can see we're below this minus 1 ATR level. So when you're below the minus 1 ATR level, you're in a short-term downtrend there. You see we had a few little pops above, but for the most part the price action has stayed below that, and we closed just around the minus 2 ATR level on Friday there. Go to the 2-hour chart here, you can see on the 2-hour time frame we had a stage 2 uptrend through July into August, broke down from little minor stage 3 top there, immediately dropped into a stage 4, and then started to had this change behavior in here. So we started to develop a potential base structure here, which could be as a stage 1 on this lower 2-hour time frame. But we've obviously had a shake at the bottom of the range, so if this can pop back into the range again, then that will continue with the formation of the stage 1. But if this continues back, then that will be a continuation of stage 4 on the intraday. So at the moment it's in very, very weak position, but if it does spring back in again, then obviously it could start to strengthen. But at the moment still on a negative signal there. On the weekly chart, you can see potentially I've got stage 1 as a question mark. When we get the couple of weeks closes back above the 30-week moving average in here, potentially start to mark it as a early stage 1. But then it's all about the secondary test here. We've got our selling climax automatic rally. So this initial automatic rally and then pullback. So we're now into potential secondary test territory. And at the moment we had this obviously big engulfing candle this week, than the week before, so we could potentially be on for a test of the lower end of the range here, which at the moment would still be stage 1, even if it does test the bottom of the range, but decidedly weaker. And there's a lot of groups and stocks that have moved back into stage 4 territory again. However, there have been a lot of stage 1 stocks setting up. There have been a lot of interesting areas of the market that haven't been shown up in the scans for a long time, such as the financials, which is really, really important group, as it's such a big group for market health overall. So the fact that lots of those are starting to set up potential stage 1 patterns is one potential positive towards the weight of evidence, and a sign that potentially is stage 1, but it's still very much undecided at the moment whether we're going to make a stage 4 continuation or whether this can continue to form out as stage 1 or not. So if we look at some of the other indexes quickly, the NYSE, similar kind of pattern, as you can see, another engulfing candle on the weekly there. Relative strength slightly better than the S&P 500. NASDAQ, same move, engulfing candle on the weekly, still holding in stage 1 at the moment, but obviously a flush could take that back into stage 4. NDX, same thing with NASDAQ 100. seeing the same in the Dow, and we're seeing the same in the small caps. So you can see the Russell has been showing better relative strength recently. It's been consolidating around the Mansfield zero line here, which is the equivalent to the S&P 500. The zero line is obviously how close is the S&P 500 line. So we're starting to outperform slightly, move in line with it, but again, engulfing candle here, still potentially forming in stage one. It did have a much better move above the 30-week moving average than some of the other indexes. But again, a test of the lower end of the range here could potentially send this back into stage four. So obviously undecided at the moment. In terms of the VIX, this has popped up over the last few weeks or so. And again, the whole week it's spent back above this 200-day moving average again. So this has been decidedly weak. It's a 200-day moving average. Reversed a little bit on Friday with the market reversal here. So if this can spring, then and we can see the VIX pop back below the 200-day moving average, then that would be a positive signal again. But it's in obviously a very volatile range around this 200-day moving average. We need to see it decidedly move back below that again to move to a more positive environment once more. In terms of individual stocks this week, it's been a few stage two breakout attempts. One I want to highlight that's obviously a major stock for the market is Tesla. Not in stage two yet, but it is very, very close to a potential early stage two breakout attempt. Now, some might argue with this, but if you look at it from using the technical attributes and everything else that makes up a stage two move, it's in position. If it starts to move decidedly through this near-term range here, you've got the 10-week moving average back above the 30-week moving average, which is starting to turn up here. Been consolidating above that 30-week moving average now for a good couple of months. Relative strength is outperforming the S&P 500. If you flick down to the daily chart here, you can see relative strength in the near term here. It's making a higher high ahead of what's going on in the stock action itself. So stock still below this level here, whereas the relative strength line is actually making a higher level. So we can look at that on a different chart. This is a comparative chart that I put up on Twitter yesterday. So you can see just the stock versus the S&P 500. So instead of using the Mansfield zero line at the bottom, because obviously not everybody understands that per se, if you look at it, if you just look at what that's actually referring to, is that we've got this move. You can see Tesla and the S&P 500 have been moving fairly in line. This is a 50-day moving average on both of them. They've both been fairly in sync until recently. So until this move, so off of the June low here, both started to move. Tesla was a little bit earlier. It bottomed in May, but also did make a higher low in June. So starting to show a little bit of divergent behavior earlier on to the market here. The move up through from the June low into August was similar. But then you can see here this pullback move in the market has been much deeper than what we've seen in Tesla here. You can see Tesla has basically held up within a fairly tight range here, stopped at its 50-day moving average, reversed back up again. You can see in the near term this week, so over the last week here, it has decidedly improved. So the market obviously dropped off completely here, but whereas Tesla has consolidated within a tight range. If we go back to the daily chart itself, you can see that consolidation move there and was on some increasing volume, and it was holding above this 200-day moving average as well. So the moving averages are in the wrong order at the moment. We want to see this grey dotted 21-day moving average above the 200-day and the 50-day. So the 50 days still down here. So we want to see both of these back above the 200-day. But if we did get a strong move from Tesla up and out into a potential early stage 2 attempt, and it started to consolidate and formed out, then these moving average would have a chance to catch up, overtake that 200-day moving average, and then it would be in much better technical shape in terms of in a few weeks to a month's time there. So it is in potential position to move into stage 2. It just obviously needs to continue to hold and against the market headwinds that we're seeing at the moment. So if it does break out into stage 2, you'd want to see obviously a strong bar, and you want to see more than 2 times the average weekly volume. So it should dwarf the volume that we've seen recently. So you can see the majority of the volumes in this kind of range. So you'd want to see big candle like this. You might not get that in a stock like Tesla per se. You get them in the smaller and mid cap names more easily. In the large caps, you don't always get the 2 times weekly volume, but on the daily chart at least, you want on any kind of breakout move, you want to see a strong bar, and you would want to see heavy volume on a breakout day. At least 1.5 times the average daily volume, and much more than you've seen recently here in this kind of range we've seen over the last month. So you'd want to see it dwarf that if it does attempt to break out. Another stock this week which actually has made a stage 2 continuation breakout. So it's already in stage 2 since it started to move out around this kind of area in here. So it broke out early, but you can see the 30-week moving average was still declining at that point, so until it started to flatten out. So it started to move up into stage 2, maybe on the second week here, as the moving average started to turn up as well. Relative strength was outperforming. You can see it's been pulling back, tightening up in this handle here from this 36-week cup and handle pattern. So it's a big pattern. It's quite a deep one. So it's obviously the risk that it's one of those punch bowl of death patterns, but 33% is not terrible in terms of a cup and handle base. You can see the handle has been very tight there. We've only got 32% cup with a 10% handle, so it is around a third. The handle's around a third of the actual depth of the cup, so it's a good looking cup and handle pattern, and highlighted this again on Thursday before the breakout move. So we dropped to the daily chart, so it was highlighted in the watch list on Thursday here on this post, and it's also been highlighted a couple of times at the end of August, somewhere in this range a couple of times, and back in May. So the last time I highlighted it before that, but as it was starting to make the classic Wyckoff structure in the lower base. So you'll notice this a lot with potential cup and handle patterns. So instead of actually attempting to buy the pivot, so your IBD entry point would be all the way up here at 11.75. If you use the Wyckoff method and you learn to understand what's going on with the base structures, then you can start to identify this kind of action in here and look for phase D type action through here. So you've got obviously phase C into phase D type action. So you've got the early Wyckoff entry points through this kind of area in here as the base has been developing, and then potentially on any continuation moves and in the handle itself, as well as a secondary structure started to form. So hence why it was being highlighted again. So HLIT looks interesting. First, obviously, continuation breakout attempt in stage 2. It's got what I call SATA score of 10. So this is a technical attributes indicator that I've come up with the 10 criteria based on the stage analysis method that we look for a stock to be in stage 2, basically. So a score of 10 is the maximum and the score of 0 is the minimum. So you'll find generally on a stage 2 breakout attempt or a continuation breakout attempt, you'll have a score of a 9 or a 10, and in the stage 4 breakdown, you'll have a score of a 1 or a 0 generally. So this one also showing relative strength, new highs ahead of the price action here. You can see way outperforming what's going on in the stock itself. You can see the stock hasn't broken out to new highs here, but the relative strength line has been moving to new highs for a good couple of months now. So really showing strong relative strength in the near term there. Another one this week which had a stage 2 breakout attempt. It looks like it was a SPAC before. As you can see, it formed around this $10 level with not much movement. So that was a potential SPAC and did what most SPACs did, sold off sharply after it finally obviously listed, and has come back strongly and been consolidating. A lot of choppy price action low, so not the ideal that you want to see, but you can see this relative strength line again breaking out to new highs ahead of the price action. You've got more than 3 times the average weekly volume this week. I think it was something like 3.61 times the average weekly volume. If we look at the daily chart, it popped out on Friday to new highs there on that heavier volume. So you can see this heavier volume that's been coming in for the last 3 days there. So showing exceptional relative strength versus the market action here. But again, as I said, it's been a bit of a sloppy one, but it has tightened up within the last few months. So potentially now you'd be looking for the stage analysis secondary entry points, or the Wyckoff backup entry point. They're both the same thing. So once the stock, if the stock can have an initial run and then comes back into the breakout level, so your secondary entry point would be on a pullback into the breakout level, then obviously that forms a potential lower risk entry point, or you can get a fairly tight stop in if you do attempt that kind of entry point. Another one that I highlighted quite a few times this week, it attempted to break out into stage 2 on Monday, I believe. So it went against obviously the heavy market action this week. So had a good decent stage 2 breakout attempt, but did pull back into the end of the week as you would expect with what was going on in the market, but still managed to complete the stage 2 breakout attempt. We've got this inverse head and shoulders pattern that's been developing, obviously rounding bottom. So you can see that the 30-week moving average has moved through and started to flatten out in here. So you can see it started to get flat as it started to turn up as this broke out. So relative strength has moved strongly above the zero line, but the zero line itself is still slightly tipping lower. So not 100% on technical attributes yet. It's probably I think it was an 8 by the end of the week after the pullback there. So you can see obviously stronger. You want good relative volume low. You can see it was more than 2 times the average weekly volume here. So that's what you want to see. If we go to charge points, so CHPT highlighted this one at some point during the week as well, as it was attempting a stage 2 breakout attempt. You can see it's been in this, basically had a really strong move. Again, this looks like it was a SPAC. You can see the consolidation around the $10 level there. So had a really strong initial run there, 300 to 400% move in a very short amount of time before being in a continual downtrend ever since, basically, which I've drawn these channel lines, which you can see here, these grey dotted lines to show the channel here. So see, it has some spring type action at the bottom of the range there. So since start of the year low, had that change of behavior move, has been consolidating in a sideways range, developing a potential stage 1 base structure. You can see it's potentially attempting to move out this week. So it did start to pop out here on some stronger relative volume. You can see the relative strength versus the S&P 500 is just starting to move above the zero line, starting to outperform. So you need to see this make another attempt. Again, you want to see some strong volume. If it does start to pop out of this range and potentially into early stage 2. PL, Planet Labs. So this one did have a strong move out into stage 2, but squatted into the end of the week. You can see volume was really, really strong. More than 3 times the average volume there, potentially even 4 times. So it was up in this range here, about the 7.5 level early in the week. So it was making a clear stage 2 breakout attempt there, but obviously the squat at the end of the week here has pulled it back under this trend line, or just in line with that. So these 3 touch points here gives us our definitive trend line there. So until it can clear that a bit more convincingly, still I would label it back in either late stage 1 at the moment again. So see if that can follow through in the next week.